Welcome to the Trading Lounge and the Indices report, and starting with the S&P 500. So with the US and European indices, we're on track there. We've had strong moves, partly because of the Conservatives in the UK getting in, so it's lifted those European markets and also kept things stable and strengthened other markets as well. The only odd one out is the Australian market, and we'll get to that when we get to it. But starting with the S&P 500 here, everything is on track, and we're looking for a new high to be made out of this ending diagonal triangle here. So with that in mind, last week we were looking for our low through here, or counting our waves down through here. We're looking for this wave C of 4 here, and now we're looking for 3 waves up. Now, it is possible that we can have this as an A and a B and a C wave up to here in blue here, and then that's it, and it can roll over from that point. However, I'd like to give it a little bit of space to breathe and look at this in terms of actually 5 waves up here for A, and then a 50-60% retracement level back for wave B, and then another 5 waves up here, bring us up into the 2150 area. So we'll just need to work through that, but our main aim here is, tracking this particular impulse wave to the upside. And we are now at wave C, and we've got a little bit of a trend line resistance through here. So with that in mind, we can move in here a little bit further. Now, on this 15-minute chart here, I've got wave 1 over to here and wave 2 to here, but it could also be from here to here as well. And the difference that will make the ABC correction that we're looking at either at this level or the next level here. So, for instance, if this wave count is correct, then we'll have our A, B, and C here down to the 38.2 retracement level, say 2108 roughly, and then a move up from that point there. Now, if this is wave 1 over here, then I need to take a slightly different view and look at the third wave as 1 and 2 here, 3 here, a lesser degree of fourth wave here, and then wave 5 here, and then that would make wave 3 over here. And then we have wave 4 here. And so pretty much in either case, we will be having an A and a B and a C here. And we're already starting to have one unfold in here as well. And of course, this is the same for the Dow Jones as well. Oops, I haven't labeled this. I jumped the gun a little bit, but that's okay. We'll put this over here, but the same thing exists here as well. So we'd be looking at this as the top of the wave 3 here and a 38.2 retracement level. Well, this is the thing. I don't know if I should take it from here or to here, depending on the structure. So if we took it from here, let's take an outside sort of view here. Then it would pull all the way back down here. That's the difference to the wave 4 of 1 lesser degree as well in here, 38.2 retracement level. But it already has got a corrective pattern in this structure here, so it would need to reject that first. But otherwise, if it was to the upside, you're not going to miss anything, because all it would do is make a move up here and then fold back into an ABC correction at that point. So it's either going to do that, or we're going to be working a little bit lower down here to the 38.2 retracement level to the wave 4 of 1 lesser degree, which is in here, and then the move up from that point there. The DAX and the FTSE are in the same boat as well. With the DAX here, we've got, I've still got 2 counts here that I'm sort of okay with, and they both come to the same conclusion as wave 4s. And one of them is, this count here with intermediate wave 3 here, and this is an A and a B and a C, and it comes right in on the 38.2 retracement level. The other one is having this wave 5 over here, and this is an A and a B wave here and a C wave down here. The 38.2 retracement level is down just a little bit further. Not that it matters at this point in time. What we need to do now is stay with the structure, and the structure here is the same as the US. So we've got up for 1, back for 2. We're heading into the third wave here. We can expect a fourth wave to pull back here, 38.2%, then wave 5 up through here, then the A, the B and the C, and then move up from there. That's why I think I've got the right count on the S&P 500 as just the A wave up here. And in this case, it would be wave 1 here, wave 2 here, all the way up for wave 3, close to the top here, 500, and a larger correction here, and then another move up here, closer to the 12.8, 13,000 here. So that's what we're looking at there. And just drilling in here, as you know, it was a little bit of a tricky count, this one, because we had a big wave 4 here, and then we also had a big wave 4 here. So it was a matter of tracking this 5th wave down, which should have 5 waves in it. But even that was a little bit tricky to work out as well. So our main mission was to, well, either see a positive wave structure, an impulse wave, or get support on the 11,500, the medium level here. And it's doing that. And yes, it will have problems at its old trend line through here as well. Because as I mentioned, we're in that 3rd wave here to the upside. So we'll be 4th and then the 5th here, such here. So I think last time we spoke, we were looking for, already had wave 1 in place, but this is what I'm not too sure with the US markets as well, if we should have this wave 1 over here too. So I need to do some bit of work on that, but it shouldn't bother us too much for the short term. We're looking at this market moving up with a short correction here. The 11,650 is going to come in as an important point here as well. So just note that it's halfway between 5 and 8 here, so it tends to carry some weight. And the FTSE, as I mentioned, the conservatives got in, so well, I guess keep things as they are, really, better or worse, it's all the same. But here we're looking at, we were looking for different structure here, but we're looking for wave 2 here, 61.8 retracement level, which we got, and we're also working that from the upside, and that's where we were last Friday. So we had this little impulse wave up through here, and it's just traveled on from that point. So it's nice to know that we got that turn there properly. Now, this one here's got a slightly different structure as well. It's almost like the 5 waves, they're already sort of in play here already. This is the spike here, then back here for wave 4, and then wave 5 going here. So we may end up with a larger correction here. Probably not, but I just have to say that's the 50-60% retracement level here. But you would think that from this old highs here, we would get some fold back in here. So let's have a look at that. The way I've counted this up here is very simple. It's just up here for 1, and 1 can also be to here as well. But I've taken as 1 and 2 and 3 and 4 and 5 here. It's got the larger correction here. So, but anyway, nice strong 3rd wave up through to here, a 4th. And the 5th wave here starting to creep, as you can see, just starting to get lows, overlapping highs and so forth. So it's got that sort of ending pattern there. So it's likely to be pulled back into the 7,000. If, however, it finds support on 70.50, the midpoint, then you go long from that point and you can go up a little bit higher here. So the idea would be to count 5 waves in this structure here. But they can already be done, and it would be up for 1 and A, B and C here for 2, up for 3, back for 4 and up for 5. So it can be done already. This does appear to be corrective as well, so there is space for that. But anyway, trigger, set up, 70.50, end of story. If it comes back down here, don't chase it down, because it's going to be really bumpy in all of this through here. Let it mature, and we'll pick the pattern up as it matures and as it completes itself. Just want to have a look at the stock 50 as well, top 50 stocks in Europe, so to speak. And last week we were also looking for a low here at 38.2 retracement level. So this has come in quite nicely as well in terms of the retracement level, and also in terms of the actual wave structure as well. So we're going to see this moving higher through here as well. So it's handy having this particular market here to look at, because sometimes between the DAX and the FTSE can be a bit different, and this helps bring them together a little bit, because this is kind of dominated by English stocks to a point. The Australian market, now we've got this big scary picture here, and it certainly can be in play. You know, we're carrying a bit of extra weight in terms of, you know, the mining sector as such, so we certainly can be pulled down the other way. Now, what I need to do to confirm that is that I need to have 5 waves down here. Okay, if I get 5 here, then I know that I'll get another 5 over here. Okay, if I only get 3 here, it's still possible to get 5 over here, but I won't know it. And if I only get 3 here, then it becomes a flat correction anyway, which means that A flat would be from this low to this high here. So it would be an A wave, a B wave, and a C wave in here, staying within that space, basically, anyway, you know. So what we do have here is we have 3 waves down. So you would have to sort of start thinking that, well, if the DAX is going up and the FTSE is going to be going up in its structure and the S&P 500, then it leaves us to maybe a sharp recovery here. And in Elliott terms, if we looked at this for the instance of, where's my 4th wave gone? It's disappeared off the map. So just bear with me a little second. I'll just put this in here. Now, this 4th wave here, realistically, can be here, okay? This is what I need to talk to you about now, and we also need to have a look at the banking sector, because obviously the banking sector is pulling this in this particular way. Now, wave 4 here can be a wave 4 as long as it doesn't overlap wave 1, and that's there, and it doesn't overlap wave 1. So it's still possible that we can have this as a wave 3 here, wave 4 here, and then a small wave 5 just taking the tops out here, and then starting our larger correction here. That's highly possible, okay? So this is what we're going to go and have a look at. So you need to take these 2 counts on board, and we need to work through them to get them right. Now, I just better save my wave 4 there. That's all good. So I want to have a look at CBA now, and with CBA you'll see much more of a bearish picture here. So it's a 4-hour chart. It's from the top around 96 area here, and when I look at this structure here, I just see that it's unfinished. I see that it's unfinished in this structure coming down here is 1 and 2 and 3 and 4 and 5. That's just for the 3rd wave here, if I call it that, because I mean it could be 5 waves down in terms of 1, 2, 3, 4, an extended 5th wave down. You know, that could be the 5 waves. That means we'd still get 5 waves over here later on, because, you know, as I just mentioned then, that if a market's been going in a particular direction, which has been up here, and you get 5 waves coming down here, well, in Elliott terms, you'll get a 3-wave counter trend, and then you'll get another 5 down, okay? So whichever way I look at this, it is like we're going to get, you know, we're going to see further downside on this. So, yeah, so the count that I've got here is quite bearish. So 1 and 2 and 1. And 2 and 1 and 2, and then this is really emphasizing what the third of a 3rd wave does. It gaps and it's powerful. So this has got the right look and feel about it to me, okay? Now, if I was wrong in this particular count, the only way I can see I was wrong is that I've got blue wave 3 already in here at this low here, and we're in at blue wave 4 here. And that's the same with the ASX 200, but I think that this is the correct count. Going to, you know, noting this, because this creates, you know, the stocks create the index, and this is one of the leading ones in that. So that would be the picture. So coming back to the Australian picture here, is that yes, we could have 1, 2, and 3, which could be an A and a B and a C wave here. Even I've got a count here that can have 1 more low in it, or we can have the wave 3 here already in play here. Probably a little bit short, and I was looking down for 55, and I was expecting support at the 56, and the 56.50 is going to come into play as well quite strongly. Maybe not just yet, but later on. Well, it is now really, and that's just the halfway point between the 8 and the 5, as mentioned before. So it's possible that we can have an A and a B and a C for wave 4 coming into play, even if we get 1 more low here. So for some reason, if we got another low here, then I could see that we've got a nice 5-wave sequence to the downside. Yeah. The other count I've just mentioned is having wave 3 already in play here, in blue wave 3 here, and that leaves this little wave 4 to 5 here, a bit small compared to wave 1 here. So I'm not that sort of keen about it, but the 38.2 retracement level comes in around the 5700 here. So that's what we can be looking for there. The move up that the US markets had and the European markets had, they didn't really get built into this very much, did they? I mean, they took off like rockets, where this one here is just sort of gone, ooh, you know, and ready to sort of take off again. I mean, ready to, you know, to move up in a very slow way. So we may We don't have to follow those markers, but the FTSE being up, 2% odd, that's going to be a bit of a pull here. So we'll see. Of course, you can buy strength, but just be careful in buying strength. That's all I'm saying, because I don't know if the Australian markets are going to be moving with the US markets at this point in time. So we've got a couple of sessions to get through before we can really nail this sort of count out here. And if you're trading these markets, then you'll just need to use the sub levels for setups, and 56.50 is the price point that you're working with here. So a move above that is your safety net. Cheers.